Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about the latest dividend income that we've had, as well as the three stocks that I plan to buy in the stock market in the week ahead. Let's get into it. Looking at our latest dividend income, we earned dividends from the Royal Bank of Canada. One from our non-registered account, whereby we earned $6.87 in dividend income from Royal Bank, as well as the 97 cents that we earned in our registered account, tax-free savings account from Royal Bank of Canada. These were the two dividend income that we received in the past week. Now, the first stock that we plan to buy in the stock market in the week ahead is Royal Bank of Canada. Royal Bank of Canada recently announced its quarterly earning results, which we will be talking about momentarily. But before we do that, let's take a look at our current holdings of Royal Bank of Canada. We currently have 5.96 fraction of shares of Royal Bank of Canada in our personal account with an all-time return of positive 26%. We also have 1.29 fraction of a shares of it in our tax-free savings account, whereby it's down by about 3%. We intend to buy fraction of shares of Royal Bank of Canada in the week ahead in the stock market. If you look at the latest return for Royal Bank of Canada, the 1 week return for this stock is showing to be up by 1.12%. The 1 month return is showing to be up by about 1%. 3 months return of close to negative 6.5%, and the 1 year return of up 5.4%. 5 year return for Royal Bank of Canada is at positive 39% plus. Royal Bank of Canada has reported a net income of $4.3 billion for the quarter ending April 30th of 2022, which is up $238 million or 6% from the prior year, with strong diluted earnings per share growth of 7% over the same period. The bank reported $2.99 earnings per share for the quarter, topping analyst consensus estimate of $2.67 by about 32 cents. What's more, the company also recently announced a quarterly dividend, which will be paid on August 24th, and stockholders of record on July 26th will be given a dividend of $1.28 per share. The ex-dividend date for this dividend is July 25th. This represents a $5.12 dividend on an annualized basis and a dividend yield of 3.91%. This is, of course, a boost for Royal Bank of Canada's previous quarterly dividend, which was at $1.20. Royal Bank of Canada's current payout ratio is at 39.5%. In terms of the price target for Royal Bank of Canada's stock, there have been a number of institutions that have this stock covered. For instance, Scotiabank has recently reduced their target price on shares of Royal Bank of Canada from $150 to now at 147 Canadian dollars in a research that they have published recently. What's more, TD Securities reduced their price target on shares of Royal Bank of Canada from $150 to $145 Canadian and set a buy rating on this stock in a research that they have published recently on Friday. CIBC has similarly reduced their price target on shares of Royal Bank of Canada to now $146, down from $149 Canadian. Fundamental Research Institute as well has reduced their price target on shares of Royal Bank of Canada from $152.07 to now $151.16 and set a buy price rating target for shares of Royal Bank of Canada. According to MarketBeat, the company currently has a consensus rating of buy and a consensus price target of $146.78 Canadian. Now, our second pick is another Canadian bank, and it's no other than Toronto Dominion Bank. Toronto Dominion Bank is traded both in Canadian dollars on Toronto Stock Exchange and as well as on the New York Stock Exchange with ticker symbol TD. Here, the performance is shown for Canadian dollars. Last trading price was at $95.99. The 1 week return for the stock is showing to be up by 3.2%. 1 month return is as well showing to be positive 3.45%. 3 months return is showing to be negative 6.15%. 1 year return of positive 10.5%, and 5 year return of close to 49%. In terms of our positions of Toronto Dominion Bank, we currently have close to 10 shares of TD in our personal account, which is up by 28%. We also have a small position in our registered retirement savings plan. In fact, 0.4 fraction of a share, which is slightly up by close to 1%. Lastly, we have 1.14 fraction of a shares of TD in our tax-free savings account, which is up by about 0.5%. We intend to add to our existing shares of Toronto Dominion Bank in the week ahead through fractional share purchases. Looking at Q2 financial results, the latest quarter earnings reports for TD, and comparing it to the same period in the previous year, the company reported earnings per share of $2.02, which was less than that of the previous period in 2021 by about 2 cents. However, this amount did exceed analysts' consensus estimates for Q2 of 2022, whereby analysts had estimated it to be at $1.88, and as a result, that was a positive beat there. In terms of the revenue, TD reported a revenue of $11.26 billion for the quarter and had a reported net income of $3.8 billion compared to $3.7 billion in the previous period of 2021 for the comparable period. Toronto Dominion Bank has also recently announced a quarterly dividend, which will be paid on July 31st, and investors of record on July 8th will be given a dividend of 89 cents per share. This represents $3.56 annualized dividend and a yield of approximately 3.7%. The ex-dividend date for this next dividend payment would be July 7th. Toronto Dominion Bank currently has a dividend payout ratio of about 41%. In terms of the latest price targets assessed by analysts covering Toronto Dominion Bank, there was a research published on March 4th by Royal Bank of Canada where they lifted their price target for Toronto Dominion Bank from $104 to $113 Canadian. They also gave the company a sector perform rating in that research. CSFB similarly has set a $102 price target on Toronto Dominion Bank and gave the stock a neutral rating in research report recently on May 20th. National Bank Financial has lowered Toronto Dominion Bank from an outperform market weight rating to a sector perform market weight rating in a research report on March 6th. And lastly, Credit Suisse Group started coverage on Toronto Dominion Bank in a research report on May 20th, and they issued a hold rating and a $102 Canadian price target for Toronto Dominion Bank. Lastly, the third and final pick for us in the week ahead is an index fund ETF. It's no other than 𝗖𝐋𝐈𝐿, iShares Core MSCI Canadian Quality. It's a dividend ETF. We currently have 6 shares of 𝗖𝐋𝐈𝐿 in our personal account. It is showing to be up by about 1%. We also have 1 shares of it in our registered retirement savings plan, which is up by close to 0.7 fraction of a percent. We have recently started picking up shares of 𝗖𝐋𝐈𝐿, which is a fund of funds that tracks an index of Canadian large and mid-cap stocks with higher than average dividend yields. In terms of the past recent returns for that, if you look at the 1-week return for 𝗖𝐋𝐈𝐿, it is up by about 0.6%. In the past 1 month, it is down by about 0.5%. 3 months return is showing to be negative 2%. 1 year return of close to 9.5 or 9.6%. And the all-time return for the past time frame since its inception, which goes back to early 2000 mid 2017, is showing to be up by close to 25%. 𝗖𝐋𝐈𝐿 is an index ETF focused on dividend-paying stocks, Canadian stocks, and has been performing quite decently despite the market volatility and turbulence. If you look at its cumulative return at the end of April of 2022, we are seeing that year to date, it has a positive return of 3.78%. The 1-year return at the end of April 30th of 2022 was at 17.55%. And the 3-year return cumulative by the end of April 30th of 2022 was at close to 36%. The cumulative return since inception of this ETF was showing to be at close to 57.5%. And the inception date for 𝗖𝐋𝐈𝐿 goes back to June 7th of 2017. It does pay a monthly dividend distribution, which is quite unique in that sense. And it is currently trailing 12 months, showing to be at the yield of 3.8%. What's more, this ETF focuses on 23 holdings that it has, and it does rebalances it automatically in terms of the volume and in terms of its weightage on a semi-annual basis. All of them are high quality, high dividend paying Canadian stocks. And the best part of all is the fact that the fee for this monthly dividend paying ETF is quite low. it is only at 0.11%. For example, if you compare this to VDY, which is another very popular Canadian monthly dividend paying ETF, there you're looking at a fee of about 0.23%. Here it's about half of that and at 0.11%. The top 10 holdings are shown here, including Nutrien, TC Energy, Royal Bank of Canada, Bank of Nova Scotia, Toronto Dominion Bank, CIBC Bank, Manulife Financial, Sun Life Financial, Fortis, and Rogers Communication. A lot of emphasis on the financial sectors. Almost half of the exposure is to financials, followed by utilities, energy, communications, and materials sectors. And all the exposure geographically is to Canadian businesses and Canadian high-quality Canadian dividend stocks. Well, there you have it, folks. These were the top 3 picks that we intend to add to our existing positions in the week ahead in the stock market. Just as an FYI, the stock market is going to be closed on Monday in the US, but it is going to be open in Canada. Let us know what you thought of this video and whether you are investing or planning to buy any of these picks in the weekend in the stock market. Which other stocks perhaps you're envisioning to pick up in the days to come? We'd love to hear from you. So be sure to leave us a comment down below and let us know what you think. If you enjoyed this video, please give this video a thumbs up and share it with someone else who might benefit from it. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, passive investing in index funds, as well as investing in growth stocks. We also talk and touch on the topic of reaching financial freedom and early retirement. With that, thank you, and I hope to see you next time.